Hey, what's up, traders? This is Rayner here, and I'm currently down with a flu, so I'm not sure if you noticed my voice. It's pretty much lower than usual. So yeah, I figured, why not just skip the intro altogether and just dive straight to the charts, alright? So I just want to walk you through a trade review, right, for a trade I took on Euro Yen, right? After the trade review, we just look at a few setups I'm looking for the week, and we just conclude today's video, right? Just keep it short since my voice isn't really, something that I want to keep pushing further, right? So the first thing I want to talk about is Euro Yen, right? So Euro Yen is a trade I took. I really can't recall if I shared this with you guys and girls, right? But basically, it was a setup I took when price approached this area of resistance over here, right? If you look back at this market, it is clearly in the downtrend. Very obvious lower highs, lower highs, lower highs, lower highs, lower highs. Right, just plot in the 200 MA, right? You probably get a pointing down, MA that's pointing lower as well. So where I went short wasn't on a daily time frame. I said I went down to a lower time frame to get the exact entry. The daily was just to trade off the daily levels, but in terms of entry, I was entering off this 1 hour time frame. So just to share with you, right? This is basically this is the black line over here, right, that you saw on the daily time frame, right? So on the 1 hour time frame, you have this double top over here, right? Price then broke below this area of support. Then we had this retracement. So this retracement was what that triggered my interest. Because if you think about this, right, on this 1 hour time frame, we have a trend, right, an uptrend, right? Because it is needless to say, because on the daily time frame, you see on the daily time frame, this one over here, you see this up move higher. On the lower time frame, it's going to be an uptrend, right? Because that's the way the markets are. Because on the lower time frame, you have more data points, right? So you have an uptrend over here. So I don't want to go short against this short-term uptrend, right? I want the market to give me clues that the trend is about to reverse, right? So the first clue I had is when price broke below this area of support, all right? That's one. The second thing I look for is to see that the bulls have exhausted themselves. So how do you tell whether the bulls are getting tired? By looking at the price action. Look at this candles, the bodies, right? It's getting smaller and smaller, right? And if you compare it to this previously, right, the bulls are, have these large bodied candles, large bodied candles, large bodied candles. But when it came to this point over here, the large bodied candles by the bulls have vaporized. It's gone, right? So what does this tell you? It's telling you that either selling pressure is coming in to contain the bulls. So this is why you get small bodied candles, right? The bulls are just unable to push price higher. So my signal to go short is a sell stop order below this low, stop loss above this high, right? And on top of it, you know that you are trading with a confluence of the higher time frame trend, right? This is a trend on the higher time frame against an area of resistance on a daily time frame. So this was how I entered the trade. All right, I don't just trade this particular pattern. For example, I don't just trade this particular pattern that you saw earlier, right? This one over here. This, for example, I don't want some of you to, just look at your chart, look for a double top, a break, and a retrace, then you go short, right? No. I don't trade this way, right? It's because the story has built up that it makes sense for me to enter the trade because the bulls are getting weak. We are against a structure resistance on a time frame which is in a downtrend, right? So we have three things. Number one, the trend. Number two, we have the area of value, right? The resistance on the higher time frame. And number three, what do we have? An entry trigger telling us that the bulls are getting weak. So this all three added together was my trading setup, right? So don't just focus on the trigger, right? Many times traders just focus on the trigger, the setup, but they don't look at the big picture, right? So this is important, right? I just want to, voice it out. So this was how I got into the trade. Okay, so how did I manage this trade? So I managed this trade on two areas, right? From a swing trading perspective and a trend following perspective. So I share with you how I managed the swing trading one first. So for the swing trading one, you can see that, right, over here is a potential area that the market may reverse. You can't really see down here, but if you go down to a lower time frame like the 4 hour, you see that this was a previous resistance that could potentially act as support. Okay, so from a swing trading perspective, I'm just trying to take, one swing in the market, right, to generate consistency in the trading, generate any consistent income. So it's not really to ride trends and to grow your wealth. So the first target I had was this low over here. That's the first target. Okay, and on the second target I had was just above this lows over here. All right, so first target here, second target here. That's how I manage it from a swing trading perspective. From a trend following perspective, right, things are slightly different, right? So from a trend following perspective, I just like to trail my stop loss using the 20 period moving average. So for the trend following side of the account, right, I was just trading the 20 period moving average, and when price closed above it, right, I manually exited this trade. So personally, I have just 2 trading accounts, one for swing trading and one for trend following, and this is basically how I manage the trade on the Euro Yen. So some of you may be thinking, okay, Rayner, right? Swing trading seems to be more profitable, right? You got off 2 targets here, and even predicted the lows over here. And trend following, you got lesser profits out of this. So yeah, in this instance, this one trade, right, the swing trading side of things seems to be more profitable. But what could potentially happen that we could not have predicted is that the market trades up higher and then it smashes lower. Then now you're going to say, oh, trend following is more profitable. So here's the thing: trading is not about 1 trade or 2 trades; it's about a series of trades. Okay, so I think this is really important to, to manage your expectations. It's about a series of trades. And trend following typically tries to, capture big trends at the market. So they're going to have a steeper drawdown, but at the same time, they're going to have a better R ratio, all right, a better risk to reward, because they're going to capture larger R in the long term. Whereas swing trading, you're going to get more consistency in your trading results because you're constantly taking profits, right? So your drawdown should be lesser, but at the same time, in terms of your R ratio, it will not be as high as trend following. So there's no right or wrong to this, right? Please, there's no right or wrong. Ultimately, it is something that you have to decide for yourself whether which approach suits you best. For me, both of them suit me fine, so I decided to go with both of them, right? Swing trading and trend following. Okay, so yeah, this is for the Euro Yen. Now I want to move on and just share with you a couple of setups that I'm looking at. So needless to say, right, Euro Yen right now is approaching back towards this area of resistance over here, right? Once again, if it comes over here, I get the same setup to go short, right? I'll look to short at this area over here. So Euro Yen, this is a level to pay attention to. Euro Canadian, another one, right? Very similar to the Euro Yen, right? See, this is another area that you want to pay attention to, right? Again, I look for the similar setup, for example, on the 1 hour time frame, right? For example, let's say it could go up. Let's do some forecast, shall we? I don't want to use the word prediction, but forecast. Price comes up, spikes higher, right? Traders who long the breakout. Then if price comes down, traders who long the breakout are now trapped, right? Because they long the breakout above this black line. So if price tries to rally once more, right? But this time the buyers got weaker and weaker, right? These are in the form of smaller bodied candles, right? And then price tries to trade lower. I'll place a sell stop order below this low, stop loss above this high. So this is my so-called forecast that I have on this Euro Canadian. Right, and last but not least, right, Euro Aussie is another one coming into this area, right? Why is this area significant, right? Look at the weekly time frame, right? You know that this pair is pretty much in a downtrend, right? In fact, it's a descending triangle, right? And it recently just broke below this area of support. So this red line over here is a weekly support, right? It's a significant level, if you ask me. And on a daily time frame, it has now retraced back towards this area, right? Previous support, now turn resistance, right? So one thing about this is that this is an area, so there is no guarantee that it's going to stop at this red line over here. It could even push up as high back towards this area over here, this smaller area of support, which could possibly turn into resistance. So treat this as a zone, right? So tell yourself that price would really push up higher before it reverses lower, right? And the same thing, right? I will look for the same setup on the lower time frame. So among all these 3 Euro pairs, right, you have Euro Aussie, Euro Canadian, and Euro Yen, right? Which one is the weakest one, if you ask me? If you ask me, the weakest one is Euro Aussie, because if you look at the structure of the market has already broke below this area of support, and right now it's retesting this previous support that could potentially turn into resistance. Whereas the earlier pairs, right, they're all still retesting their resistance, and their resistance once more. So if you ask me, the Euro Aussie is a weaker currency pair, and the one that I'll be more inclined to go short on. Right, so this is something what they call a relative strength, right? Comparing which is the strongest and weakest currency, and then taking the particular currency to trade. Okay, so yeah, that's all I have for you in this week's market analysis. I really want to, I don't want to push my voice any further. So if there's any questions or anything, right, just feel free to let me know in the comment section below. I can still type, don't worry. Okay, so yeah, and if you enjoyed this video, feel free to hit the subscribe button below, right? I'll talk to you soon.